G'day everyone, John Howell speaking. Today I'm going to give you a quick rundown on the XJO on the Australian market. That's the ASX top 200 stocks in the Australian stock market. What we're looking at right now, looking at a simple daily chart with an open, high, low and closed bar chart. And we can see we had the months down here. So going back from September last year right to where it is right now. It's getting close to the end of May. And we can see we've had this pushback or pullback here in the last sort of couple of days here. But one thing I've noticed straight away is if I go get my Fibonacci tool and I click there and drag it down through there and bring it down to the bottom, notice the previous major swing high, which is this one here, to the major low, which is this one down here, before running back up. Notice the 62%, it hovered around that level. It ran up to this level here, actually got a lot of resistance, and it slowly stepped up, and then got a lot of sideways consolidation off that 62% level, and then we're starting to get some pushback. So if I just highlight that now and bring a trend line there, and let me now just delete the Fibonacci level, we can clearly see that's where it's getting a lot of sideways movement. Not only that, but we can clearly see that if I just bring it up here, we can actually see that around this level here was in fact a lot of support. If I zoom it in a bit more, we can see here that it actually struggled around there a fair bit. Now if I bring up a candlestick chart so we can see it a bit better, we actually can see it actually broke down. This big day here broke down. Let me just get the pointer. You can see this big day here broke down, and when it broke down it came back up towards that resistance line we just drew, and we got a ran up, and now we're getting a rejection off that. Not only that, but we can see here, if I just draw a line from this thing here to this here, we can clearly see that there was a nice little sort of a channel, nice little support there. It was bouncing support here once, almost support twice, three times, and then we got this sort of escalate, big massive nice run to the high side, and then we started to fail at that major 62% level. Now that wasn't going from the major high, the major low, it was just going from the major swing, the major previous swing, to where we are right now. So what we're seeing right now is that if the market is breaking down, which it is right now, we're actually down about 1.23% right now on the XJO. We can see that the market looks like it wants to have a bit of a run towards the sort of, I would reckon, the 3,600 level, down towards just below that level there. So around about this level here looks like that's going to be a target for this particular market. Same as the Dow Jones and the S&P, they look like they're failing, and they look like they're coming off a bit too. So right now, looking at today's market, today is Monday, the 18th of May, and we're seeing that the market is slowly coming off through here. What's likely to come? We don't really know what's going to happen, but by basing on chart and chart analysis, looks like we could get a bit of a pushback here, a bit of a pullback, if we are going to continue running on the higher side. So that's all I have for you today. Just a quick wrap on the XJO. What we see right now here, once again we can see it nicely stepping up through here, but this pullback is now broken past these major support levels, which was likely to be support. Now it's been resistance through here. I could probably see this market maybe running back down towards these levels, 3,600 level, before we start to do any major turning points. If this is going to be a major turning point, then I'll probably set around these levels here before we head back up again. If not, we might just end up sideways. But in my trading room, we are day traders, and we take it one day at a time, and we'll see what happens looking forward. So this is John Howe signing off, and I hope you like it. Leave some comments, and I'll speak to you very shortly.